Welcome to the Daily Update Podcast, where I'll go over the action in the market for Wednesday, June 4th, and we'll see how things look for Thursday, June 5th. Recapping Wednesday's action, the S&P 500 closed Wednesday virtually flat, with it posting a marginal gain of 0.01%. Early gains pushed prices to an intraday high just shy of the R1 resistance level at 59.91, but after bouncing back to the unchanged level and then trying to set a new high, late-day selling erased those advances, with the market finding support at the unchanged mark. The market remains in a non-trending phase as the average directional index, or ADX, continues to hover below its moving average, though it's showing signs of an upward turn. Despite the lack of a clear trend, positive momentum persists across short, intermediate, and long-term time frames, with the S&P holding above its 20, 50, and 200-day moving averages. Volatility did ease a bit, with the VIX declining to 17.61, signaling a slightly calmer environment. The Commodity Channel Index, or CCI, based on 20 periods, joined other positive indicators, but momentum oscillators remain mixed, with the slope oscillator flashing short-term bearish signals. Trading volume continues to be below average. Market sentiment has now returned to neutral. On the economic front, Wednesday's data releases were largely disappointing. The ISM Services PMI came in at 49.9, below the 50 threshold that signals expansion. The ADP Employment Change Report showed just 37,000 jobs added, well below the expected 115,000. The MBA Mortgage Applications Index this week fell by 3.9%. However, the S&P Global Services PMI offered a brighter note at 53.7, indicating growth in the services sector. Market dynamics showed resilience in megacaps and semiconductors, with the FANG index reaching another new all-time high. Falling interest rates, with the 10-year yield dropping 10 basis points to 4.36%, provided some support but failed to ignite broader gains. Ongoing concerns about tariffs and potential trade wars continue to create uncertainty. Sector performance was mixed. Tech and communication held firm, with standout performances by Meta and Netflix. Financials and discretionary lagged, while small caps relinquished some of their recent gains. Looking ahead to Thursday, June 5th, investors will focus on a slate of economic reports. This includes initial and continuing jobless claims, productivity and unit labor costs, and the trade balance. These data points could set the tone for the session, particularly if they signal inflationary pressures or unexpected weakness in employment. Seasonally, June 5th has historically been positive for the Dow, S&P, and NASDAQ in post-election years, which could provide a tailwind. The S&P remains in a positive but non-trending state, with potential for upside if economic data surprises to the upside. Conversely, disappointing reports could lead to downside pressure or continued sideways action. Barring major negative catalysts, such as heightened geopolitical tensions or weak employment figures, the S&P is expected to remain resilient. Key pivot points will guide intraday trading, with traders watching whether the market can break above resistance levels or hold critical support levels. Globally, Europe continues to outperform the U.S. in 2025 thus far, supported by lower valuations and an 8% annual growth in global money supply, which has propelled the All-Country World Index to new highs. In conclusion, the S&P is navigating a choppy, non-trending phase with mixed signals, but maintains a positive bias across all time frames. Thursday's economic data, particularly employment-related reports, could provide the catalyst needed for a breakout or further consolidation. In this environment, investors may find opportunities in individual stock selection, as this remains a stock picker's market. Thank you very much, and I will talk to you in the next podcast.